Well, welcome back to our Marketing Means Business short videos, in which we reveal what brands can do for you and your business, how brands mint fresh money for you in sales, income and profitability, how brands mine money for you, money they have already started to store under your floorboards, and how your brands amass money and bank it for your old age. In part 1, we looked at how a brand generates income, which all comes about because of a basic truth. Those we will describe as customers buy products, but customers choose brands. We choose a brand, we exchange money for the brand experience, and in so doing, we return brand income to the brand's owner. In part 2, we saw how a brand delivers profitability to its owner by offering a customer something that he or she perceives as valuable. Customers will pay more for a preferred brand, and that opens the door to sustainable profitability. A brand does the business in every commercial sector: business to consumer, business to business, tourism, arts, sport, digital, traditional, not-for-profit, health, events, charities, video games, law, education. Customers, donors, students, patients, clients all choose brands and all perceive value in the brand. So in every business sector, a brand mints fresh money in two ways: creating income and delivering profit. Okay, but there is more to come. Brands accumulate money in asset value, which can be measured in hard cash. Let's see how that is brought about. Let's assume your customer chooses your brand on one occasion. That choice creates brand income. So far, so familiar. Now what happens when the action is repeated? The brand is chosen again. Of course, we grow brand income with the second purchase, but something else is happening. Something much more important. A repeat purchase is evidence of customer satisfaction. No customer is daft enough to repeat purchase a brand if dissatisfied. And this first repeat makes it more likely the customer will buy again. A second repeat reinforces that likelihood. More exposure, more satisfaction, and increasing expectation of future purchases. Each repetition increases the likelihood of future purchase, future brand income, and future brand profit. Each repetition is also a step on the ladder to loyalty. And that brings us to an idea more important to a brand owner than any other: customer loyalty to the brand. An expectation of future profits confers monetary value on a brand. Customer loyalty cements and augments that expectation and increases the value, and that value belongs to the brand's owner. Let's look at that again. A brand repeatedly perceived as preferable, which is chosen over competing offers repeatedly and is purchased in preference to competing offers, will encourage customer loyalty. And that loyalty, which provides an expectation of future brand profit, gives the brand value to the brand's owner. Brand value can be considerable. Wall Street and its millions of investors and analysts know very well where the money is. It's what they do. Wall Street and the City of London say that brands are worth a pot of money. Take a few examples. The balance sheet, the official scorecard of Coca-Cola, Apple, Google, says each brand is worth nothing. Zero, zilch, nada. The business is worth plenty. Their total assets on the balance sheet range from nearly $90 to around $320 billion, not including the brands, of course. But the money men reckon they are worth 2 to 4 times that by market capitalization. That's a regular financial metric, which is current share price times the number of shares available to buy. That's a gap of 100 to nearly $500 billion. The smart money says that Coca-Cola brand is worth $100 billion, Apple $487 billion, and Google $495 billion. What's in a name, said Will Shakespeare. Well, if you're Google, there's nearly $500 billion in a name. Interbrand are a bit conservative. 70 to 185 billion is all they ascribe to our brands, but that's still plenty. Finally, from time to time, a brand gets sold by one owner to another, and things open up a bit. When Kellogg's bought Pringles from P&G a few years ago, the price was estimated in excess of $3 billion just for the brand, certainly more than the balance sheet value of zero. Every brand has value, not only mega brands, and lots. And that includes your brand or brands. Your brand is already valuable today. If you had no loyal customers, you would have no business. You would have failed. But you do have loyal customers, and they do represent an expectation of future profit. That expectation is locked in your brand. To measure the value locked in your brands today, just estimate the number of customers you believe to be loyal. Calculate your profit margin on each transaction, multiply that margin margin by the number of transactions you expect from these loyal customers, and bingo, you have a rough calculation of what your brand is worth. The money you could mine if you sold the brand today. Your accountant will know it as goodwill, and incidentally won't let you put it on the balance sheet. Sorry, no, not on the balance sheet, but it is very real, this brand value. Not as big as the Coca-Cola mine, but Coke was worth nothing in 1886 either, nor Google in 1997, nor Apple in 1976. You can hope. Back to brand loyalty going forward. Keep coaxing more and more customers into your loyalty box, and the pile of gold under your floorboards will grow. In time, your brands can grow to be worth a lot of cash. Cash as security on a loan, cash for pensions, or just cash for spending. The purpose of these 3 short videos has been to focus on brands, to urge you brand owners to value your brands, recognize your brands, measure their financial worth, give customer loyalty to the brand your time and thought, and the brands will repay 100 times over. They will mint fresh money over and over again, they will mine money for you, and they will amass money and store it for a rainy day. We hope you've enjoyed this series, and we wish you every luck in your endeavors to make money with marketing. Marketing means business. Business means marketing. Marketing as a toolkit to build the value stored in your brands. Enjoy.